please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
You're with us here on a fresh new edition of Trading Hour. I'm Prashant Nair. With me, my colleague Ekta Batra. The markets are not doing very much. 10,580 is where we stand. That's the 11-odd point change. So compared to the last 4 weeks, which have seen successive higher highs, I mean, this one has not been as eventful, although there's still 2 days left, today and tomorrow, for the week to come to a close. So maybe things will change, but I think pretty understandable that after large gains and big recovery from the lows, you spend some time doing not very much. And of course, there's been a fair bit to contend with. If last week the big talking point was oil, this week, and it sort of began on Tuesday, has been what's happened with the US 10-year. I mean, you know, enough and more in terms of cues and variables which influence trade either ways. I mean, so 12 points is what we have on the Nifty. We'll get into sectors and stocks in a bit. Ekta, morning.
Hi Prashant. Well, it is April expiry as well, and besides that we have a lot of numbers to contend with. We have Axis Bank, which is coming out with numbers. I'm sure that's going to be one which is very keenly awaited. Yes Bank, which is releasing numbers, and something like a Biocon as well, which will be coming out with its numbers. But nonetheless, talking about Biocon, we had Syngene, which reported its numbers as well, and the stock is actually reacting negatively today. Maybe one of the reasons is because of the strong run-up we saw yesterday, and plus there was the management that stated that, in fact, let's cut across to the management.
We're happy to report a strong finish to the year, and this together with some of the good progress we made in earlier quarters allowed FY18 to recover from what was a slow start to be a good year overall. We're particularly happy with the progress we made towards the end of the year in some of our key strategic growth areas. And I'm thinking here really around the good, strong quarter that we had within the biologics vertical. On a reported basis, Q4 was a very positive quarter for Syngene, due largely to two factors. Firstly, good underlying growth across all of our business verticals. And secondly, the largely optical effect you get from having a low prior year base. You'll recall in the fourth quarter 17, was heavily impacted by the fire incident that we had in December 16. So looking at the financials, we reported 426 crore rupees in revenues for the fourth quarter. That's a jump.
Okay, so that is the management just talking briefly about the numbers. We're going to get in touch with the management and have a one-to-one conversation with them. So wait by for that. But as of now, let's get talking about the technicals of the market. We have Sudarshan Sukhani joining in to discuss exactly that. Sudarshan, hi, morning. Over to you then. For the Nifty, 10,582 is where we're at, flat on expiry day.
Yeah, good morning again. Well, it's quite flat, and for the last 8 trading days, the Nifty has been in a very narrow range. Support for that range comes somewhere around 10,500 and resistance at 10,650. This 150 range in the Nifty is not tradable. We get a sense of movement, we get a sense of big moves, but actually they are 20-30 point moves up or down, and we remain where we are. So the trade in the Nifty will come when once one of these boundaries is taken out. Either we go above 650, 10,650, and that becomes a buying opportunity, or we go below 10,500, and that would be a significant short. I would feel that the Nifty is now ready for a short position, but of course it has to tell us that it will do so.
In terms of stocks, morning, Sudarshan, what would you trade?
Well, mid caps are the flavor of the day, and in fact for the last 2-3 days, because large caps are doing nothing. So Shree Infra is a buying opportunity. The stock has gone through a reasonable correction, so we are now buying after a dip. It's always a good place to buy when a stock corrects and we buy on a dip. The second stock is again a buying opportunity. That's Jubilant Foods, lifetime new highs consistently and regularly. That itself calls for a buy. And today the momentum is in its favor. So Jubilant Foods is the second buy. 2 buying ideas, Shree Infra and Jubilant Foods, and 1 short sell, and that is BPCL. Oil marketing companies are falling day after day relentlessly. There is no stopping. So as an intraday trade, take a short in BPCL.
Okay. All right. So Darshan, we have a couple of Twitter queries for you. First up is Chavi Jain, who has 1,000 shares of CEAT at 1612. Wants to know whether to hold or sell.
Well, it's always difficult to give an advice when the price has fallen below your cost price. But C8 does give the sense that it's going to go through a deeper correction. So my view is that if you are a short-term trader, you need to get out of a losing position, especially when the chart suggests more downside is going to come. So the advice would be, for a short-term trader, sell and get out.
Okay, one more question. Vellingari wants to know if Titan can be bought.
Well, Titan can be bought anytime. But since he's asking for a timing, I think he's a short-term trader. So wait patiently. In the next 2-3 months, most stocks will correct. And you can probably get Titan around 890, 880, 890. So if you're a long-term investor, there is no hurry. You can get it cheaper in the next 2-3 months. So wait.
Okay. All right, Sudarshan, we let you go on that note. Thanks very much for joining in and talking to us. So that is some news coming in on Biocon. They won an order worth around 54.4 crores from NTPC. Stock is marginally in the green reacting to that. Remember, mid-cap index is absolutely flat at this point. We have C. Rudramurthy of Vachna Investments joining in to discuss what he's strategizing in terms of F&O calls. Rudramurthy, over to you then. Stocks and Nifty call.
See, for pure intraday, I definitely expect some amount of short covering for the expiry, especially in Bank Nifty. Everyone have shorted till their neck and they are expecting furthermore down move, but market is definitely not doing that move on the downside. So big short covering can come, especially in Bank Nifty. So I don't advocate any expiry traders, especially to be short on Bank Nifty. In fact, you can go long on Bank Nifty futures even at current levels for the expiry, expecting around 150 points more on the upside. Even call options of Bank Nifty 24,700 call, currently trading at around 130 can be bought, expecting a target of about 200. But however, this is just my expiry view. 10,640, 650 will be a positional resistance, again from where for the next month market might correct post results as well as post the Karnataka elections outcome. Now coming to my stock specific call, for me, TCS has already been a history of $100 billion company. People will now next talk about Reliance. Reliance is one stock which has given no returns at all for last 3-5 years, and many people are not keen on Reliance. But I am telling, forget the last 3-5 years past. In future, next 3 to 5 years, Reliance will be the big talking point. It will be the best blue chip stock for me. Buy Reliance at current levels. Stock action is very positive. A lot of open interest addition is seen. Buy next month futures as well as call options of next month. I am looking at targets of 1030 on Reliance with a stop loss of 970. Last week I recommended technology to be very positive, and KPIT was my stock last week. Along with NIIT technology, I still recommend KPIT even at current levels in futures for the next month. 260 will be my immediate target with stop loss of 240. And my last buy call is on Biocon. This stock has given a clear breakout above levels of 650. Look at 700 as target on Biocon with a stop loss of 645.
Rudramurthy, thank you very much. Appreciate you joining in, and we speak with you again later. Well, the market is up 8 points, so there's not very much to take away from that, and not from the broader space as well. So let's take our first quick break on Trading Hour. We come back and we all turn our attention to, as always, commodities. What's top of mind there? Manisha joins in. Navneet Damani of Motilal comes in as well.
Well, we've been pointing out that there have been a lot of stocks from, say, the high beta segment, you can call it that, which have declined today. So something like Bhushan Steel is down and out for another session today. But besides that, there are a couple of other stocks which stand out, such as Reliance Naval and Engineering, which is down around 13% and in fact lost around 30% on a month-to-date basis or thereabout. So within this whole gamut, there's also PC Jewelers, which in fact stands out. It's a double-digit loss that we've seen on PC Jewelers on rumors of the promoters selling as well as income tax raids. The management, however, clarified to CNBC TV18 that the promoter's stake has fallen as one of the promoters, Padam Chand Gupta, has gifted away shares. Let's listen in to the management, and it's important to note the intraday recovery on the stock as well.
So Padam Chand Gupta, out of his entire holding of more than 25% in the company, has gifted some part to someone in his family, given the very fact that he is not involved in the business and the promoter stakeholding still remains very comfortably above the 51%. There is no management change. There is no change in the company's strategy. There is no change in the company's operating effectiveness because of this thing. So it's a personal decision which he took. The company had issued this preferential CCDs and CCPS to DVI and Fidelity. And once it was a fully convertible instrument, and once this thing was converted into equity, the equity base of the company went up, and the promoters' shareholding declined only as a percentage, not in the absolute sense. The main promoter, Mr. Balram Garg, who is also the MD and CEO of the company, he continues to retain his entire holding without having sold even a single share.
Okay, that's essentially PC Jewelers. I mean, the stock is having a fair bit of movement today. So it was down 8 to 9%. It recovered half of that when we, during the course of that conversation. After the conversation, it fell again. I mean, it was down 9%, but it's come up once again, still down 5%, and of course, a long way off from where it was trading, I mean, just a few days back. So it's been fraught with a fair bit of trouble. So it's this now, just not that far back, it was that entire episode with Vakranji, so to speak. But I think we've got the management of Syngene with us. Ekta, you want to take that conversation forward?
Yes, in fact, we do have the management of Syngene with us. Jonathan Hunt, the CEO of the company, now joins in to discuss the Q4 performance. Mr. Hunt, hi, thank you very much for joining in. Well, let's start with this 40% growth that you've shown in your revenue this time. Is it because of a low base, or what is the underlying momentum, and what can we expect going forward?
Yeah, we're pleased with it. We had a good finish to the year, I think. If you recall, if you go back to the very beginning of FY18, growth was a little bit low for us. It was down at 6% in the first quarter. And we've seen it steadily build momentum throughout the year. So 6% became 10%, became 15%, and then this is at the reported level, and then quite a strong finish to the year. A couple of things in there I'd call out. I think actually pretty good growth across each one of the verticals. So chemistry, biology, dedicated centers, the manufacturing, all done well, all had a strong finish for the year. I think the thing that's different from maybe this time last year would be the biologics vertical emerging. We put a lot of capex in that over the last year or so. It came online around about the third quarter, and you can see it now start to contribute to the revenue. So that's a good long-term driver for the business. It's an area where you're seeing globally an increase of demand. There's a bit of shortage of capacity, and we've got good infrastructure, good capability. So we're seeing good demand signals from the market for the biologics manufacturing.
Okay, so what is the sustainable growth rate that we could expect in terms of the revenue in the coming quarters in FY19?
Yeah, I mean, the outlook, I think, for the year is positive as we go into FY19. So it's that strong finish to FY18. The full year growth rate, if you look at it on a reported basis, was 17%. I think that sets the floor really for performance in FY19. Expect to maybe come in a little bit ahead of that, so high teens on a reported basis. If you look at the operational revenue, so the revenue from the R&D research services, so discounting for some of the other income benefits that we get in that top line revenue number, I'd expect it to be a step up again from that, so into the low 20s as we go into FY19.
Okay. Mr. Hunt, one of the criticisms of this quarter has been that despite the revenue growth and the robustness that you've seen in terms of your revenue growth, it hasn't percolated as much as, say, anticipated, one, into the margins, and secondly, into the bottom line, into the profit, which was a growth of around 7 to 8% odd. What is the reason for that, and what can we expect? Yeah,
you can see that very clearly in the P&L, but it's part of the plan. You know, we said we're going to continue to make the right investments to drive long-term value creation. And you've seen us do that during the year. So continued investment in CapEx, new capabilities, new capacity. We've invested a real step up, and we're going to continue to do this in our sales and marketing. And of course, that's an investment. So the cost goes in first, but it creates real shareholder value over the long term. And we'd expect to see that in this continuing improvement in our sales top line. The other bit, of course, to remember is that the margins over the last year or so, particularly EBITDA and then at the PAT level, have had a real boost from that other operating income. So the other income that we get from, remember we took out a large loan to fund our CapEx plan. Much of that has been sitting in the bank earning a great interest rate. It's not our core business. You know, we're a scientific services business, but it has helped our profitability this year. So we've probably run a little bit hot during the year compared to where we would expect to be. I think the margins at the fourth quarter, so EBITDA in the low 30s, PAT at or around 20%, they look very sustainable. And if you put that into the context of our industry, that's upper quartile performance. Most of our peer group companies around the world would have EBITDA margins in the high 20s at best and PAT in the mid-teens. So I think it reflects the added value of the services and the way we integrate them into something that really creates value for our customers.
So margins would sustain above 30% in FY19?
So you have to repeat that. I couldn't quite hear you.
Your margins would remain or sustain above 30% in FY19?
Yeah, I think that's the range we target at the EBITDA level. As you saw, 34%, 35% in the fourth quarter. So between anywhere in that lower range of the 30s is very sustainable for a business like Syngene. And at the PAT level, around about the 20%. Maybe a little bit down in FY19 from that because we have one or two tax holiday expiries. Much of our business runs under the government's SEZ tax scheme, and one or two of the units there are starting to come to their 10th anniversary. So we'll see the tax rate drift up a little bit during FY19, but good performance at the EBITDA level.
Okay. Mr. Hunt, before we let you go, you know, I had a question with regards to this Form 483 on your BA/BE facility, your bioequivalence facility. Can you just tell us maybe a little more granular detail about what those observations were, how many were they, and what your response has been? When do you expect any sort of clearance?
I'm really sorry, but the line's terrible at the moment. I couldn't actually hear the question.
The Form 483 that you've received, or the observations that you've received from the US FDA on one of your facilities, which is mentioned in your press release?
Okay, sorry, the FDA 483, yeah. We've already responded, and actually we think it's a matter that we can deal with very, very quickly. It's largely procedural, and we're pretty confident that it's not going to have any adverse effect on our operations. So that unit continues to serve customers, is operating back to normal. We're just waiting to hear back from the FDA that they were satisfied with our response and the changes that we've already put through. So it's not something at this stage that I see having a negative impact.